If you're an Amazon seller or an Amazon investor, then I suggest you keep watching this video because I'm about to be going over why a lot of people are predicting that the stock market and the overall economy is about to go through a big slump. So keep watching this video. I may be able to give you a little bit of insight into what you can do to protect yourself and also give you a heads up as to what may be coming right around the corner. It's looking like it's pretty for sure gonna happen right around the corner, so keep watching this video. This is not gonna be the happiest video that I've ever made. I'm not too excited to be talking about dark times ahead of us, so I'm a little bit bummed out to report this, but if I can give you a heads up, and if you didn't know about this already and now is your heads up, please start making some decisions and taking some actions to protect yourself and your bank account. Okay, so let's go ahead and jump into it. You know, I'm a big stock market follower and trader, and there's this article here in Market Watch saying this year is lining up exactly like the 2000.com bubble crash. Stocks will drop 40% from here. That's what a former Goldman Sachs manager actually says. So this guy used to be with Goldman Sachs. I mean, he's probably pretty smart. He used to be with them. He's no longer with them. And this is what he is saying about where the market is headed. This is what happened in 2000, okay? The NASDAQ 2000 did a similar bear market bounce as stocks did this year, okay? So obviously we had that big sell-off. Stocks hit an all-time low around March 23rd. They bounced, and over the past roughly month, we've been in this uptrend. It stalled, then fell 43%, making a new low 4 months later. Now that's what happened in 2000, and we are pretty much set to do a very similar thing here. He added that the presidential election on the horizon, as it was in 2000 as well, creates further risk and uncertainty. Chances are in Trump's favor that he is going to actually serve 2 terms. So it's not like a huge amount of uncertainty. Chances are we're gonna have Trump again, so that's probably just gonna be more Trump moving forward. The reason why the 2000 bubble is important is because we are now even more relying on tech and internet companies even more now than we were back in 2000, especially if you're an Amazon seller and your main source of income is from Amazon. You need to start looking at plan B options now, because if buying dries up on Amazon, does your buying and your business slow down to a creep? So finding other sources to make money or other products to offer. If you're offering a product right now that is not needed, it's not an essential item, maybe you should start to expand your product line into products that are more of an essential, because this is going to be the rest of 2020 that we're looking at this. Right now it's May, it's early May. So we've got 3 more quarters roughly in 2020. So I would highly recommend looking into plan Bs if you're an Amazon seller. If you're an Amazon investor, then I may, me personally, I today sold my Amazon shares. Today was a nice rally. Here, I'll show you the chart, what happened today. So we've been in this uptrend, since middle of March with Amazon. It's been going up and up and up, and then it's been consolidating and lingering around these highs up here in like the 2400s, 2300s. Well, it fell down out of that bouncing around consolidation area, and it fell down to the 2200s, and then it did a push up to try and regain, and it finished around the low 2300s. Now, I sold into that big push today, so I am all cash right now. I don't have anything invested in any stocks because I am expecting us to pull back and revisit the lows. And so, if you got investments, you may want to do the same. Warren Buffett, one of the best and biggest investors in the world, did something very similar. Here in this article, it actually says, finally, the fact Warren Buffett was hoarding a record amount of cash as he did in 2000 is another sign of what's to come. Okay, so if you didn't know, recently Warren Buffett held his annual shareholders meeting, and he told everybody that they just sold out completely out of all of their airline stocks, which is like billions, I don't even know, maybe it says it in here. But basically Warren Buffett now has, oh, here you go. Billionaire investor Warren Buffett's gloomy remarks about airlines have also caught investors' attention as his company Berkshire Hathaway reported a near $50 billion loss in the first quarter, and he's now sitting on $137 billion in cash. Now, this dude is not a cash person. This dude is always invested in the markets. So the fact that he's got a boatload of cash that he's just sitting on really tells you that he doesn't trust where the markets are headed right now, and so he would rather be liquid. So I'm liquid as well. I'm not really the type of investor that stays invested. I typically stay more liquid and I enter the markets temporarily on a short-term basis. But this guy, Warren Buffett, is clearly a long-term investor and he's sitting cash right now. It's not all of his cash. I'm sure he's got a lot of other investments that he's just long-term sitting on. But let's see, it says April produced the best monthly gains for the Dow Jones and S&P in 82 years after the worst first quarter in history. But May's bad start looks set to continue on Monday with futures down. So let's go to the chart and check out. Now this is the Amazon chart. You know, if we had to draw some levels here, support and everything, let me just zoom out. Now this is the daily chart. So I do believe, I may be wrong, who knows, I'm just throwing it out there. I believe that in the next week or two, Amazon is gonna be revisiting this support level right here on 2185, around the 2100s. It's gonna be visiting there, and then the next support level looks to be right here in the low 2000s. So what's probably gonna happen, it's gonna come down here to 2185, bounce, go up a little bit, and then come back down through that support down to the 2035 area. Obviously, it maybe do a bunch of bouncing around, and depending on what the S&P 500 is doing at the time, you know, it may come faster, it may come slower, but yeah, so it is going to lose a lot of its market cap and valuation. Again, I'm just predicting, I'm just guessing, so we'll see what actually happens. But for the longest time, so many investors across YouTube, CNBC, all the big timers have been thinking this whole run-up is unwarranted, and they're scratching their heads like, why is the market just bouncing so much? You know, when you look at Fibonacci retracement levels and you look at how far we've bounced off of that V bottom that we made, it's like a 60%, I mean, what Goldman just said, it's 60% retracement, which is insanely high, which means that it's gone so far, it's so overextended up to the upside that the coming back down may be a lot faster than people were probably expecting, because usually that's what happens in the market. If it goes up, it's gonna come back down faster, right? If it goes up very fast, it's gonna come back down even faster. So I'm just giving you a heads up. I'm not trying to be this negative person that's putting out, by all means, I hope this doesn't happen. I hope I'm completely wrong, but I'm just saying, in case I am right, I'm trying to protect myself. You should probably protect yourself. If you're an Amazon seller, I recommend, like I said, maybe scaling down on your inventory, maybe not getting caught with a ton of inventory, maybe investing in other products that are easier to sell because it's essentials, it's necessities. You know, when people start to lose their income or they make less money, they cut their frivolous spending and they only really buy the stuff that they absolutely need in order to survive and stuff. And so maybe you start to look into products that are more survival based. So let's take a look at the S&P. And we'll see here, this is exactly what I was talking about. It came down, V-bottom, bounced back up, came back up, still pushed up. And then today, it was slipping down. Now the level that everybody's talking about, like that when it breaks down under this level, it's gonna be very fast and just free falling, is this 272 right here, 2720 level right here. Now, if the market comes and cracks below that, then the bears are in control and it's gonna be coming down to this 2175 level. As you can see, it's been making higher lows, higher lows, higher lows. And this point right here, we're at an inflection point where if it holds this level, then we're good. Chances are it's not gonna hold this level and it's going to be revisiting this 2720 level right here. So I don't know. I'm just a little bit nervous. I'm just trying to give you a heads up. You know, start to look into those safeguards. If you got money in the market or if you've been riding this wave up, then maybe start to come back to cash, close your position. Another indicator here, this is the MACD right here. Now this measures momentum. So as you can see, when it was coming down, there was a lot of downward momentum. And then when these lines crossed over each other right there, that's when the momentum shifted into the upside. So, you know, it was right here, you know, where the MACD shifted and pushed all the way up, and then it led to this massive uptrend. Well, if you look at the lines right now, they are just about to cross over each other. And the green bars here, you know, they're starting to fade down into the red. So I'm just nervous, all right? I'm just nervous, man. I'm scared that we're gonna be headed down to the lows, and it just really sucks that if you're trying to retire right now, it's not a good time to retire. And I mean, I don't know. It is what it is. Let's jump back to MarketWatch and see. So what they're recommending is downsize your house if you can. With mortgage rates as at record lows and summer upon us, we'll likely get a quick dead cat bounce in the housing market. So he's recommending downsize your house, make a housing change. I wouldn't personally recommend that. If you're at good equity with your house, then sit on your house. I mean, if your mortgage payment is super high, and you have good equity, maybe think about refinancing your house. Maybe think about pulling some of that cash out of your house if you need the cash to survive and you're not gonna be able to pay your bills because your job is dwindling down or your income is suffering. But I mean, basically, the former Goldman Sachs manager is basically saying liquidate everything, sell everything you can, just get to a good solid cash position so that you are safe and secure for the next 6 to 8 months or whatever. I mean, and that's what I'm doing. I'm doing that same thing. So anyway, I hope this video gave you a little heads up, gave you some value. Hit that thumbs up button if it did help you out. Leave a comment below if you want to chat it up with me. If you want to book a call with me and have me and my team help you grow your Amazon business and help you expand and increase your sales during this crazy time that we're about to be going through, book a call with me. Head over to evolvemedia.agency. Let's jump on a call and let's talk about how we could potentially work together. But anyway, thanks for watching this video, and I will see you in the next one.